Another episode of the Market Outlook series. I'm Kavita Agrawal, and I will take you through the analysis of Nifty starting from the largest time frame to the smallest time frame. So we'll start with the weekly time frame, and the whole agenda of assessing Nifty on the weekly time frame is just to understand what kind of trend is unfolding on the index right now. As the trend, we will use basic trend line and momentum analysis. We have an upward trending channel, or rather an accelerated upward trending channel here on Nifty's weekly time frame. And if you look closely on accelerated trending channel, Nifty has taken support multiple times. So this was the first time. This is where the acceleration began. This was the second time establishing the trend line. This was the third, and now this is the fourth time. We can see a retest happening now. So sustains, we can expect reversal and upward trajectory. What you will also notice here is that the broader trendline channel that is formed has also acted as a resistance. Right? So with that information, now let's turn our attention to the momentum indicator, that is the RSI. RSI's activity from the bottom of June 22, what we can see is this was the beginning of a new bull trend. The Nifty has been taking strong support above the level of 40 on the weekly time frames RSI, which indicates to us that it's been in the bull range, which again shows us that the bull trend is still intact. Even though this correction feels like it's lasted too long and it's gone too far, still from a weekly perspective, the underlying trend continues to remain very bullish. Having established that, let's move to a time frame lower, that is the daily time frame, and refine our assessment a little bit further. So on the daily time frame also, if you look at the RSI, what does it suggest to us? That since the bottom of COVID, right, that was over here, since this bottom, let's zoom into that. COVID bottom, if I can draw the range, ever since the RSI has stabilized above the level of 40, it has respected that level very well. The only time it actually came below that level was after this massive movement above the level of, or massive activity above the level of 70 and 80. There it first gave a small negative divergence correction in which it took support at the level of 40, a strong bounce back. Now, this bounce back is where it indicated that it might correct further. How did it do that? The indication basically was in the fact that the RSI had shifted to the bear range. And why would I say that? Because the bear range, when in the bear range, the RSI resists the level of 60. So there are actually two things that RSI does when it's in the bear range and the bull range. Okay. So the bear range or the negative range, right? So when the RSI is in the negative range, it follows the levels of 30 minus. It's in the positive range or the bullish range. You will see that the level of 40 will pretty much be respected and the level of 70 will constantly get breached. So 70 plus. So this plus and this minus are very important. However, sometimes when we notice a correction within a bullish trend, not give you a complete negative range shift, it might give you a halfway negative range shift, which means that the RSI may not completely go below the level of 30. It may still respect sort of the level of 40 or stay in between the level of 30 and 40, but it will resist the level of 60, which is exactly what we are seeing here, right? And you can see the level of 40 getting breached. So anyway, this was a little bit on the past. Let's move to more recent activity. Now, ever since this big correction that ended, so this big correction or this in the positive range of RSI on the daily time frame ended sometime in July, which is also when we saw the beginning of a brand new bull trend in the index. Since then, the RSI has maintained a pretty solid positive range shift. Now, coming to this stage, the more recent price activity. What I can notice here is the daily time frame RSI has breached below the level of 60 once, given a small bounce back, but it still did not make its way to the level of 60, right? However, this leg of correction has taken support at the level of 40. So I personally expect, based on the daily timeframes analysis, that since the weekly time frame is also still very, very bullish, but we have a small dent in the positive range on the daily time frames RSI, there might be another rally which I would expect would breach this high. However, we will need to observe whether or not it sustains above the level of 60 or whether it takes resistance and falls down. Now, the reason why I spent so much time explaining this section is for this very reason. In technical analysis, it's often said that the history repeats itself. So, understanding the past price action is very important if you want to, with any success, guess what is going to happen in the future, right? At the end of the day, we are not predicting, we're just taking best estimates based on what has already happened, correct? So, in this activity, so this was back in December 21, and what I can notice over here is, see this over here level of 40 was respected. There was a small rally after a massive correction. This rally, right? Now this rally stopped close to the level of 60. Before that, there was also this small rally which coincides with this upside movement. And then there was a strong decline again to take support at this trend line, right? So trend line support, rally resistance from level of 60 on the RSI, and continuation of downtrend. Coming back to the present, I expect this trend line support to hold. I don't expect the market to break below this level. Now, if this low gets breached, then of course more correction is to be expected and this entire analysis gets nullified. So what I'm going to do is I'm going to clean up this chart a little bit now. The intraday chart territory, and this is the 75-minute time frame. Let's assess the trends from 4th of June onwards because that is the day we experienced major volatility in the market. You can see that the RSI showcased strong positive range, which was an indication that the bull run is intact and pretty strong until a negative divergence was forged. So here it's forming a higher high compared to the previous days. If you look at the RSI, it, it is barely able to sustain itself above the level of 60. So this showed us that momentum had weakened, right? And soon enough, we saw a major correction here, all the way from 25,000 to 24,000 approximately. That's almost 1,000 point drop in a matter of just 4 days, or rather 2 trading days. Here, this stopped right when RSI touched the level of 30, and we can see a new leg of rally sustained itself, right? So RSI once the RSI sustained above the level of 40 again, we could clearly see that the bull range momentum was again in place. Now, this correction, that was the September 24th correction. Now, this is where the market actually topped out, and this is the correction that we are currently living in. Staying on the 75-minute time frame about this very leg of correction is that there was no indication on the thing about this correction on the 75-minute time frame, that there was no indication on the 75-minute time frame that the momentum is going to shift. Why do I say that? because if you look at the RSI here, the RSI is clearly above the level of 70. It is actually at 75 here, and there is also no negative divergence in place, right? However, when the RSI declined below the level of 40 and even reached the level of 30, this was definitely an indication that more weakness is expected to continue in the market. The 75-minute time frame, when it comes to analysis of Nifty, is definitely more responsive to signaling bottoms than tops. And this I am saying on the basis of the many hours and hours of analysis that I've done over the past many years. So you can see here a small positive divergence has been forged as the price made a lower low, but the RSI made a higher low. I would actually call this a double positive divergence, right? Now, this positive divergence has actually already been played out, correct? Because we can see that there's been a strong rally from 23,300 levels all the way to 24,700 levels, which is a 1,500 point rally. Now, this entire rally has been corrected, achieved retracement by 79%. So, a 79% retracement has already happened on this rally. Now, why is this rally important? This rally was important because it established a higher high on the Nifty. So this was the previous high, as you can see. And because Nifty has breached this, it has established a higher high. Now, typically, when a stock or an index, any underlying, establishes a higher high, it can do one of the two things if the trend is to continue. It can either pull back to the previous high level, which in this case would have been 24,480 approximately, or it goes back to retest the previous low. As long as it doesn't breach the previous low, we can expect that the reversal can continue. I think as long as, again, the low of 23,300 is not breached, we are in good hands. I mean that the upside is expected to continue further. However, it may not be a very sharp V-shaped recovery. It might play out with some more consolidation given that the holiday season is currently going on. To one time frame lower, that is the 15-minute time frame. Now, on a time frame, I want to specifically pay attention to this correction that we've seen, the latest correctionary trend. So the extent of this correction on the 15-minute time frame was actually indicated when the RSI here breached the level of 30. So this was our indication that this is not going to be the end of the correction. We should expect a new low in the market. And Nifty did that. The moment it broke below this level, there was a big reaction, lots of selling in the market. However, you will see that even the price is now below, way below this level. Look at the RSI. The RSI has actually been sustaining very well above the level of 30. And in fact, since 23rd of December, even though the price has not given a lot of activity, this particular low December sustained itself at the level of 40, even though the low on the 19th of December below the level of 30, giving us a positive divergence. Why? Because the price has forged a lower low and the RSI has forged a higher low. So that's a positive divergence, right? Now, what I'm also seeing that the rally that came after has taken the RSI to 60 plus levels. So bullishness seems to be building up, but since it is still not 70 above, I don't want to be very optimistic right away. So this is a wait and watch period for Nifty overall. The broad long-term trend obviously continues to remain very bullish based on the analysis we did on weekly and daily time frame. But based on the intraday time frame, so the shorter period time frame, we need to wait for slightly more confirmations. What would those confirmations be? Number one, Nifty has given a breakout of this consolidation zone on the upside. It seems to be coming back down to retest the trend line. So this trend line that you're seeing is definitely lending support to the index. I want to get alerted when two things happen here. Number one, the 15-minute time frame comes back to the level of 40. So I'm going to set an alert for the same. So Nifty 15-minute RSI 25, because that is what I use. I don't use the RSI 14 period. I use the RSI 25 period. It reduces the noise significantly. So when it's crossing the value 40, then once I want to get alerted, the message I will receive is this. I will create this alert. Now, another thing is that this level, right? So this low of the consolidation, which is around 23,650. If this gets breached, then also I would like to get alerted. So I will call this alert a lower low and I will create it. Simple as that. Did it get set? I'm going to click on the price and I'm going to set that again because it did not get put up properly. So Nifty regular trading hour 23,656. Let's just change it to 650. And lower low is the alert that I want. Alert is set. What that I would like to set up is if and when Nifty establishes a higher high on this trend. Now, technically, this entire correction is just one. There is no breach here, but because there is a big gap here, as soon as Nifty enters the territory of that gap, I would like to get alerted. So again, click on the price or option A. So that's 24,000 level, and I will set an alert of higher high, right? So if this gap gets properly filled, the chance of Nifty heading higher is going to be better. Of course, more momentum analysis will need to be done. That will need to be done when that happens. Now, taking a look at the smallest intraday time frame that we have, that is the 3-minute time frame, I can see a very short term shift in RSI into the positive range has already happened. RSI is kind of respecting the level of staying above the level of 30 clearly, still reaching the level of 40, which is showing some sense of weakness. On the upside, it is breaking above the level of 60, and only in the last rally, that is here, where it gave a breakout above the consolidation, did it actually sustain above the level of 70, right? So the 3-minute time frame is giving a very clear-cut indication of an upcoming bull trend. But again, 3-minute time frames analysis can only take us into maybe a couple days into the future. 15-minute is still uncertain. We need to see momentum indications develop a little more. 75-minute also is on the more uncertain side. The daily, I would say, looks bullish because the latest evidence that we have is support from the level of 40, which in my opinion is bullish. I would like to know when the daily time frame makes it, when the daily time frame's RSI makes it to the level of 60. So again, let's set an alert on this. RSI indicator and pressed Alt A or Option A on Mac. And I'm going to enter the level of 60. So when Nifty one day crosses RSI on the chart of Nifty one day, when RSI 25 period crosses the value of 60, I want to be alerted. So this is what I'm setting up and I'll create that. For today's market outlook, I hope this detailed analysis of Nifty was helpful to you. I will see you in the next video next week. Thank you.